That's awesome.
Thank you.
All right. So, how's everyone doing?
Doing good, doing good.
Awesome.
Uh, we're live on YouTube, but I have some fundamental updates to go through whenever you're
Okay.
ready.
Do you want to share your screen?
Yeah, for sure.
Okay. Let me screen. There you go. You should be able to now.
Alright.
All right. Happy Wednesday.
Yeah, happy Wednesday. Alright, you guys can see this?
Yes.
Alright, awesome. Let's get started. So, over the weekend and even earlier this week, we were just getting some news about NATO allies that were kind of split on whether or not to talk to Russia, to talk to Putin about a potential peace deal. But what the plan was, pretty much the people who were on the side of actually being able to talk to Putin and see if he was okay with like any sort of peace deal, they were going to test what was okay with Ukraine. What were like some of the conditions and whatnot that were okay with Ukraine, in order to come to some sort of an agreement, because obviously we know that no one's really going to be pushing Putin to do a lot of things, right? No one wants to escalate the situation any further, pretty much, piss him off in any way. So they were trying to see like what's the middle ground that we can come to, and a lot of other leaders who were not okay with talking to Putin, because they knew that the chances are that Putin's probably not going to be serious about any sort of peace deal, given that the two leaders were asked to talk to each other, and while they were having these talks, there was still war that was going on in the background. There were still attacks that were, going on in the background. So now it seems like there are no breakthroughs in talks with Ukraine, because the skeptical NATO allies are evaluating Russia's promise to scale back the military operations in Ukraine. And then, along with that, kind of leading right into this, it seems like it's likely to be limited. If there's going to be any sort of pullback, it's likely to be limited and tactical. So the pretty much the sentiment that's being put out so far is that the war is going to continue, and there is still a lot of market uncertainty when it comes from this fundamental geopolitical perspective. We're still going to see all the tensions rising. We're still going to see the war kind of just, continuing on. We're still going to see those effects into the Europe, energy prices, inflation, and all that type of stuff. So what we have instead now is the biggest economy of Europe kind of triggering an emergency plan to secure energy supplies. So we saw last week that President Biden was working with some of the European leaders to kind of figure out how to pull Europe off of Russian oil dependency and move on to other energy sources and all that type of stuff. So I think we talked about this in our weekly outlook as well last week, Stefanos, where we talked about how much energy resources the U.S. will have to provide and other countries will have to step up to support Europe in general, because they have been depending on Russian oil for decades, right? And a majority of it, like I'm talking about over, 70 to 80% of Europe was depending on Russian oil. So if you're going to replace something like that in a matter of like couple of weeks, then you would need almost every, let's say, NATO ally to step up and kind of provide those resources. So we're right now from a market sentiment perspective. You guys can go back. I didn't really go through every single detail of these articles. You guys can go back and read through these articles, but I gave you guys a summary of all of this. But that pretty much just shows us how the market, as we're tapping into some of these key areas, coming to the end of this first quarter of 2021 in like about 2 days, like today and tomorrow, we're starting to see how from a technical level, prices now starting to tap into some of these key areas. And now we're starting to see some more market uncertainty and some more market fear potentially building up back into the market. And that essentially kind of leads to the question of, can we see price pushing back for these safe haven currencies, commodities, and assets in general, pushing back up and see that bullish momentum and kind of ride that wave again, that some of us may have missed last time. So overall, in the last like almost 2 months since this war has been going on, we saw a lot of fear with coming into the market. We saw a lot of these asset classes just tapping into new time highs, if not already coming back and tapping into some of the key levels. And then we started to see things kind of calm down a little bit, where we saw talks about Putin and then Ukrainian president coming together talking, but the war still going on in the background. But there was still this sense of can they come to a peace deal? And then we saw like how NATO allies in general were kind of skeptical of what the next move should be. So we started to see things kind of calm down from that perspective, but we never really saw any true progress in these talks. And now we're starting to see that fear pick back up again.
Did you get that alert yesterday about them pulling their military back?
This one? Or this one?
Um, but yeah, Russian pullback from it's likely to be limited. So there was a different alert yesterday that came out that I think is what pushed gold down pretty significantly. I think it pushed it down like 100 pips during the New York session, and it was this original um, report saying that they are pulling their military back. So I just didn't know if you saw that one,
Yeah,
but I guess
right
this
here.
is like an update.
Russia has offered to fundamentally cut back its military operations. Sparked
Mm,
optimism, but there's a very strong reason for caution. So they said that,
yeah,
you know, if they are going to do it, again, it's going to be very limited, but it's also going to be tactical.
it's it's definitely he's very smoke and mirrors Putin, which I mean as a leader during war you have to be, I guess. But
Hmm.
yeah, Biden was actually saying this morning that he's gonna be patient to see if they actually do anything like that.
Yeah, because that's where the skeptical part comes in, where, well, Biden has already kind of put out his strong views about this entire situation, but we also have seen him roll back on his word as well, right? And then we also saw how a lot of other leaders were like, "Hey, we know that it might not, work out, but is it really worth it the shot to go and talk to Putin, right? Maybe he'll come to some sort of a peace agreement." And then we had leaders who were just straight up like, anyone who's supporting Putin, like, that's not someone who we want to be working with. No one should be pushing Ukraine to agree to any sort of terms that are not acceptable in general.
I
So,
think there's a difference between like supporting him and like always having a diplomatic approach and being willing to talk to him and negotiate and see what you can do to calm these things down because if nobody's doing that, everything's kind of up in the air.
no, yeah, absolutely. Those
You
are
have to
just
be
the
a leader.
different sentiments. And right now, we have to realize with all the fundamentals coming out, they're all legit just playing on market sentiment. Especially when you
Oh
start to
yeah.
hit some of those key levels and you're coming close to, specific times like end of quarters. We all know end of quarters, there's always corrections and whatnot. We can expect volatility in the markets and everything. But that's where the market sentiment is the most important. Like, we will see the Fed playing with the market sentiment leading to, let's say, interest rates or something like that, right?
Hmm.
And we will see fundamentals like this, like a lot of mixed fundamentals and whatnot, leading to specific market sentiment. So it's important to understand, like, fundamentally what's going on. And I agree with you, there's a difference between, you know, being like, hey, just to end the war, you know, these should be the acceptable terms. That in no way means that we're agreeing with whatever Putin is doing and
Yeah.
all of that. So there's a difference between that and just straight up being like, well, we're supporting Putin and, you should agree to everything that he's saying no matter what.
Hmm.
But, so those are like, some fundamentals, but understand what's the market sentiment. What kind of, when we usually look at the economic calendar here, for example, you look at the yellow folders, you look at the orange folders, and you're like, all right, we've been getting like weak employment data or consumer data or, this data, that data. So we know already, kind of going into interest rates, what kind of monetary policies to expect. The high impact folder, the red folder. Think about fundamentals the same way. We look at this news every single day. I open up Bloomberg every single day, right before getting onto the charts. And we look at it on YouTube, like, twice a week for the weekly outlook and then for our Wednesday sessions. So think of like all this news that we're looking at, like yellow and orange folders, and try to understand if there was a red folder to come out, if there was like an immediate news to come out, then you can already tell, what's going to be happening. Right now, they're giving you a lot of market fear, right? They're saying that the war is potentially going to continue because the Russian pullback, we're not seeing any progress from that just yet. If anything, there's just talks going on, right? We haven't seen like actual real progress where the Russian military has pulled back or anything like that completely from Ukraine. So what kind of market sentiment does that put out to you as an investor? Are you going to go and put your money into those risky assets, or are you going to still keep your money into safe haven currencies and commodities? Are you still going to be buying a gold? Those kind of things.
Absolutely. Yeah, no, when I was talking before, I was talking more specifically from like a leadership standpoint
Mm-hmm.
as like the leader of a country and what you should be doing. Like if you remember back in 2016, the previous administration, when we came in, there was extremely hostile ties between us and North Korea. Do you
Mm-hmm.
remember that?
Yep.
And when that was going on, it was pretty weird for about a month or two, where like they were really hard with the threats. And our president actually went over to North Korea to handle it, to talk to him about it. Like that's something that we kind of need right now. Maybe not so much going over to Russia, but you need to be able to be strong and handle this situation, and being able to negotiate and kind of persuade him to ease off and talk instead of just like sanctions from a distance. It should be being diplomatic and going over to Europe, which he just did,
Mm-hmm.
talking to the leaders, coming up with something constructive, and and having that peace, right now, because right now it's just like it's fueling the I don't know, fueling the whole situation right now
Mm-hmm.
with saying that we need to, Putin can't remain in power, and then having to walk that back, and then not walking that back. It's
Right.
just like that's not going to do anything.
Right. 100%.
But that's all political talk, so I'm not going to get into that. But um, I'm going to go through the economic calendar.
Yeah, let's do it.
Awesome.
So Sunday, when the market opens up, nothing really comes out, right? So it's all pretty much technical moves. And then in London session on Monday, we had Governor Bailey speaking, and this is more on the economic side here. So he was talking about macroeconomics and financial stability. And then after that, easy session, London session, New York session, Asian session, not much coming out there. And then even yesterday, really the only important news from a US perspective was the job openings, which kind of kicks off the employment news that we're going to be seeing this week. So that's the very first one that came out. Pretty good compared to the previous and what we had forecasted. Even the consumer confidence, it seems like we're bumping up a little bit compared to the previous and the forecast. This is the financial confidence of consumer spending. So, like, what do they think the outlook is going to be like from 6 months from now or the next year, right? Which is a pretty good thing so far looking at this. Also, given the fact that we just had interest rate hikes. So, I'm pretty surprised to see that we're maintaining some optimism here as well. Now, coming into today, not much happened in London session, right, besides ECB president speaking and then MPC members speaking. But at 15 minutes right after the market opens up, so in about 45 minutes or so, we're going to have ADP non-farm employment change come out. So usually the market does react to this a little bit on the 15 and 30 minute time frames. The only times I've really seen market not react to this is if there was any other important data coming out, like if Powell was speaking or if the next day we had something that was a little bit more important coming out. But so I do expect the market to react to this right at the market open, maybe even a couple of minutes before the market opens. From a technical perspective, just seeing those setups on the 15 and 30 minute time frames, break and retest or anything like that. So that's what we're going to be watching out for from a technical perspective. What I want to see here is some of these numbers increasing like we did in the JOLTS job openings to kind of show that the labor market is doing pretty well, or we're actually at a stable level instead of just decreasing back down and cutting back on jobs again. And then after that, you have the final GDP, but again, this is 30 minutes before New York Stock Exchange open up. So I think we will see a little bit of continued volume from ADP non-farm leading into final GDP. And then if you're trading USD CAD or oil, obviously you want to pay attention to crude oil inventories. Also, because we will have OPEC news coming out too, right? So tomorrow we have OPEC meetings, and then to touch on that, we had President Biden who was kind of trying to talk to OPEC, and then I believe it was the Prince of Saudi who just straight up refused to work with Biden. And then we had Boris Johnson fly over and kind of talk to the OPEC members just to, kind of convince them to increase the production of oil, which is going to help with the energy prices, which have hiked because of obviously inflation, but more importantly because of the war. So this is going to be something important to watch out for if you're trading US oil or USD CAD and you have been trying to trade, what's happening with OPEC. So today and tomorrow for USD CAD and US oil if you're trading those. After that, nothing much else in Asian session. As you can see, rest of the New York session is quite easy. Asian's quite easy as well. And then going into pre-London session, you have some GBP data coming out. So I do expect the market to react to this a little bit. And then in the actual London session on Thursday, a little bit of Euro news. So I don't expect too much volatility happening in London session, but I do expect some just technical moves and everything like that setting up. So pay attention to some of the higher time frame levels, what's happening on the daily, what's happening on the 4 hour, 1 hour, and then kind of use those confirmations instead of looking for any impulsive trades in London session. And then going into New York, you have GDP data coming out, you have the challenger job cuts, and then you also, more importantly, have the core PCE price index. So this is inflation excluding food and energy. So we know that food and energy are clearly the outliers given the inflation, given the war, all that stuff which has been affecting energy. That has been kind of skewing this data that we saw with CPI. So this is going to give you a sense of the pure inflation and whether or not it's just food and energy prices that have been kind of skewing the data, or are we actually as consumers paying higher prices of any other goods and services that we're consuming ourselves. So there's that, and then unemployment claims as every Thursday. After that, the rest of the session, not much really coming out even in Asian. The next important data coming out is NFP on Friday. So on Thursday, Asian session, and even London session on Friday, I expect the market to consolidate. I expect volatility setting up for NFP on Friday.
Awesome.
You want to go over the technical stuff?
Of course.
Let's do it.
All right. Let's start with GJ over here. I have a lot of our levels marked off, as usual. Some of our lows formed from the 2008 market crash. We have our multi-year downtrend, which, as you guys can see, we're now breaking and also retesting the previous bullish trend from COVID over here. So this was our COVID move, coming right back down to the lows caused from Brexit. We come right back down and retest that area, come up, hold support, and then all of a sudden March 2020, January 2020, we end up holding a resistance and tanking all the way back down to that level. Never break the lows from the 2008 market crash over here. So ever since then, we've been in this bullish trend, higher highs, higher lows, pushing all the way back up to this previous retracement from Brexit of 156, right? So ever since then, we've been holding a consolidation over here from 156 and 149. Previous candle body highs over here, previous support formed during the recovery from the 2008 market crash. Because if you guys see, tanked all the way back down to 120, retracement, retest of the low, and then all of a sudden, if you guys remember, a lot of you guys were younger, all of us were younger at this time, so none of us were really trading, but ended up holding that support. And as you guys know, economically, we enter that recovery after a few years, right? Monetary policy in place, everything is starting to recover a little bit when it comes to businesses, economics, everything starts to come back to life around 2012, 2013, and we end up holding the support, and we've been bullish ever since. But if you guys take a look at that price action during that recovery, kind of like what we're going through right now, we had that support formed at 149 over here. We broke through 156, held support at 156, and we were bullish ever since then, heading right up for 196 up here, right? Then 2016, Brexit ends up happening, right? So Brexit pushes us all the way down. Never break the low of 2008, right? formed this low over here, new yearly low, back in September, October. We retrace, right? End up holding support. A lot of sellers cash out. They grab profits. Buyers take over, and then all of a sudden this happens as well, where we end up coming down to retest that low again. Then again, like I said, COVID happens, and we've been bullish ever since. So paying attention to this price action is going to help you. Oh, wrong color. Paying attention to this price action right here is going to help you understand what's probably going to be coming into play when it comes to GJ right now, right? Where we're recovering weakness in the Japanese yen, extreme weakness as of late in the Japanese yen, and more people pulling their money into risk currencies like the Great Britain pound. So just keep in mind what we have over here. Can we have something very similar right over here up into 168, 170, pushing us all the way up? Again, if you have further weakness in the Japanese yen and more strength in any of these risk currencies, you're going to see something like that. And also, not to mention any interest rate hikes that it seems like the U.S., like if you're paying attention to the U.S. interest rate hikes, it's probably going to be the same in England, where they're all talking about, a lot of these FOMC members talking about increasing rates by 50 basis points per hike a couple times till the end of this year, right? So when you have a 50 basis point increase in the U.S., you could be seeing something similar in the U.K. So just pay attention to that and understand that that's gonna be pushing us up. Now, if you guys look at
Just to touch on that real quick, Stefanos.
sure,
So 50 basis point hike, usually it tends to bring in that optimism from an investor side. But you also want to pay attention to what's the economic condition. Because last time the Bank of England increased interest rates, instead of bringing in that optimism, there was a quick little fear that came in. And that's because you're sitting at, I believe they're sitting at like a 0.75% interest rate right now. So that brought in that little bit of fear of, can the consumers actually hold on to, or can the consumers actually deal with the interest rate hike that they just had? Yeah, 0.75%, there you go. Can the consumers actually be able to handle that type of interest rate hike, and what does that mean for any sort of investing, savings, and taking out loans and all that type of stuff in the country? Are the consumers financially stable enough to do that? So
yes,
you want to pay attention to that. If they maintain this interest rate in the next meeting, which that still brings in a little bit of optimism, because that tells you that the consumers are able to handle the current interest rate hike. But if they have to drop it back down, same for the US, then that tells you that they increase the interest rates too early, and they're going to have to find another way to fight against inflation.
yeah, that's the tricky part about increasing interest rates. That goes for any country, where when you increase interest rates, it gets harder to do business. So it gets harder for business owners to borrow money. Banks lending out money, they're making more money from doing so. So when you have that, again, that's going to hurt the stock market. But at the same time, it's going to raise the value of whatever dollar or a pound or whatever currency it is. It's going to raise the value of it because it's harder to get. It's more expensive to get. But at the same time, like I said, it's going to hurt that country a little bit when it comes to increasing rates and making it harder to do business. So it's a rock and a hard place. The problem is that the Fed and all these central banks have kind of created this inflation problem, and now they have to fight it because they've been pumping so much money into the market. And that, to a certain extent, that needed to happen, right? With everyone not working, people needed to live. So you had to stimulate the market. Any kind of economic crash, you have to stimulate the people and help them out in any sort of way. And COVID really wasn't anybody's fault. So that needed to happen. But again, it hurts us in the long run because you're adding more currency into the circulation of the economy. You're adding more money into that economy, pumping it in artificially. So when you're doing that, you're adding more, which decreases the value, and that makes it much harder for people to buy and have purchasing power because now their dollar is not worth that much, right? And your dollar is losing money by the day, or losing value by the day. So it's just one thing to keep in mind. So that's a great point. We could be on our way up, but if the economy's not ready for something like that, and then all of a sudden the UK stock market crashes, this is gonna tank again, right? We're gonna hold resistance at some point, either right over here where we are right now, right up here, 167,500. We hold a resistance there, or we can end up retesting our highs up here and then tanking again. So you just got to go by what you see and not what you think, and just be fluid in the market, understanding the way candles are forming, supports are breaking, resistances are breaking, closing above, closing below, and just understanding where the market's going. That's why technical analysis itself is so important, just like fundamental and sentimental analysis. All right, so taking a look over here on the monthly, the um, March candle is extremely bullish. Where we ended up coming all the way down, the beginning of March was the invasion of Ukraine, right? We ended up flipping bullish with the interest rate hikes, and then another interest rate hike pushes us all the way back up above 157, 158, previous highs over here, yearly highs, and coming all the way up to close to 165 over here. Just gonna mark that off. And then also look to the left once we get to the lower time frames. Section like right now. What I actually had was 164 marked off as well. Because if you guys take a look over here to the left, you have this wick right here, this wick, and these wicks right over here that we ended up rejecting over here. Pretty strong level 164. So I'm just going to mark that off as well. And then we'll mark a few off as we go down. All right. Looking at the current price action, we got a pretty hard rejection of that whole area. If you want to call this like a zone between 164 and 165 over here, price ended up rejecting this level pretty hard and flipping bearish. But we are still holding 160 flat, psychological level, as well as a previous area of interest over here to the left as well. We have this wick right here, previous rejections, you got a wick right there, and then that resistance right there perfectly held over here to the left back in 2013. So we end up rejecting that level multiple times right now where we're holding that support. So are we going to end up closing above that area? The week has two days to close. The monthly is going to be closing probably tomorrow. Just see, yeah. Tomorrow the monthly ends up closing. So we'll see if this candle ends up closing below or above 160. So that'll be a big telltale sign for us. But the weekly over here has a couple days to close. We'll see where we end up closing. Same exact thing, above or below 160. Now looking at the daily over here. Now I don't like having this here, so I'm just gonna take that off. Right now we're currently holding this resistance as far as candle body highs go, and we'll see to the left if we have anything that's been rejecting that level as well. I see previous candle body highs to the left over here, and that's a good hint for you as to why we are holding that resistance right now. See that previous resistance, support over here, resistance right there. So right now, if you take a look, yesterday we ended up tapping into this level down here around 159, which we can mark off as well, which obviously wicks on the higher time frames are supports on the lower time frames and resistances on the lower time frames. So we'll see where we're at right there. But the main thing is we are holding support right here on the daily, and this candle is rejecting 160 as well. We grabbed liquidity over here, it looks like, but we ended up rejecting. But the one thing you want to understand is this candle ended up creating a lower high and a lower low over here. Strong candle body close as well. This candle created its top wick, passed the low of this candle right here, and touched all the way into this area. So again, it's going to be very important to see where this candle ends up closing on the daily. If we close below, that could be a further indication that we could be continuing down. So let's say we close like this. Next candle could come up, create a top wick, retest 160, and continue to fill that wick and continue down into certain levels like maybe 157.5 and 158. Obviously previous we'll actually call it 158, which has been a critical level over here. Resistance, you got a wick right there as well. So that's our next area that we could continue down into and where we'd want to take profit if we do take sells from any kind of area over here. It makes sense, guys, so far? Anybody have any questions? Cool. Don't forget the chat. Makes sense. Awesome. That's what we like to hear. Let's do this. All right. So now, as we see from 159, we ended up holding that support over here. We ended up holding the same exact support, right? Reacting to this level over here and holding a support right around 159,700, I would say, where we ended up respecting this area. We got that bullish candle closed, but we never retested 160. It looked like, well, I mean, we still can, but can we end up rejecting this area and continuing down to fill this wick over here? Only thing is, this candle ended up creating a higher low with a bottom wick already formed and a higher high, where we ended up passing the high of this wick right here and continuing up into this level right up here. So this is an interesting level as well that we're going to mark off. So I know Peter grabbed a nice little move over here on the 5-minute. As price ended up forming support, he took it based on the higher time frames, but saw it on the lower time frames and was able to grab, I believe, 10 pips over here. So as you guys can see, we're just going to adjust this now. Right around here, because that's your support. Price is kind of ranging in this area over here, holding support over here as well. And looking at the more immediate price action, you get that bullish candle close, higher formed. This candle comes down, or these candles come down. Very weak bearish candles over here, but we wanted to retest this area over here, hold support, and continue to drive right back up to 160,500, I would say. Previous support over here. So now we keep rejecting that area. It looked like we could possibly be forming a support right here, which we still can, right? It looks like we keep rejecting this area right here. But I don't want to take anything unless we close above this area. So we normally like to do this. Forget about that area right there and concentrate on something like this coming right back up into this previous zone of 161,200. Previous resistance, kind of have a clean move to the left over here that you can mirror, wait for that close above this level, and then you can take this thing up. But anything in here, it's getting a little tricky to take, right? Recently, we have had some good liquidity on GJ where we've had some pretty big ranges. Like normally this, low liquidity would be a very small range, like a 5 pip range, or not 5, but like a 10, 15 pip range. This is a 40 pip range, right? But again, everything is just kind of wacky, I would say, as far as like the price action goes. I would wait for that close above this level and continue up. Looking at the 30-minute, everything is sideways, right? Very messy price action. This is something that you want to like kind of stay away from over here and wait for this move above this level over here. And then any kind of sells, I think you'll have safe sells possibly below 159,500, maybe 400 over here. But as you can see, when you go down to the lower time frames, it's a little messy over here. So maybe you may want to wait for sells once you break 159, safe sells at least, once you break 159, because look how much nicer this price action is if you look to the left. You got 100 pips in this range with a clean move to the left all the way back down to 158, right? But until you reach that area, before you reach that area, everything's pretty messy over here. Right? So that's all you're waiting for. It's just these levels to break. You look for the current levels that we're in right now, and they're all messy. And it's something that you can just kind of wait to take, right? It's NFP week, not as much volume. So you can just kind of wait for price to break out of these areas. And this will be your key area to play. Right here. And this will be your key area to play right here. Anything in here, it's kind of messy to take. Does that make sense, guys?
Does anyone have questions even?
I hope so.
Does anyone have any questions even on YouTube?
Awesome. Now I want to look at some trends over here as well. you guys take a look, we've been respecting this trend right here, right? Creating lower lows, lower highs over here. Now we're tapping off that area. Now, anything advanced as far as like any kind of trades you guys want to take, if this is a like level that you're used to, and if you see this candle reacting to this area, we come up, hold resistance at a lower high over here, and price continues down. Wait for that close below this level if you guys trade the lower time frames, and you could possibly grab a trade right back down into here. I'm not personally going to take that. Really, depending on, I am fluid, so depending on how the candles form, but odds are I'm not going to take this. I don't like this range right here. I'm much more content just staying out, and being fine not taking that, because now if you end up taking that loss in here, right, and then price ends up continuing up and you get this range over here or this range right here, you end up at break even if you end up grabbing one of these moves, most likely at break even. But if you wait and stay out of this, and you don't have to participate in every single move that you see, then you wait for these areas, you're up 2 or 3% if you get that price action.
I would just wait for that entire area to be cleared up, because right now it looks a little bit messy, but if you were to hop up to, let's say, the hourly or even the 4-hour time frame, we would see like how this consolidation is shared on the hourly. But once you break below that 159,700 area, you got that clean move just pushing back down.
Exactly. And you guys could see, like, based on the higher time frames too, like how we keep rejecting this area right here. Right? So price is failing to break above that, break above the bearish trend that we've been respecting on all these time frames. Now, once, like, this candle is always going to be bullish until we start flipping bearish right around this area over here. And then you still have this support that you want to break before you take any kind of sells right over here. So I would still, you got a nice range in this area on the lower time frames. Same thing right here. Price keeps respecting this area. Why not just wait for this move right here? Right? So that's why it helps hopping up to higher time frames, lower time frames, throughout your entire analysis. Keep going back and forth, and then especially before you're about to take a trade, just check out the higher time frames one more time before you enter that trade, because they could look a lot different than they did when you first started breaking down the chart. All right, so that's GJ. We got our game plan for GJ. You guys know what to wait for over here. I would just wait for this area to break. Wait for this area to break right over here, 159, and then you have price action all the way back down to 158, about 100 pips right here for you to take this move. All right, you guys ready for gold?
Let's do it.
Awesome. All right, again, same thing with gold over here. We've been respecting this bullish trend where price has been tapping into this area. Bullish trend, higher highs, higher lows. We've been in this consolidation over here with a lot of uncertainty in the market, a lot of things going on as well from 2020, which we ended up creating our ultimate highs up here of 2075 during COVID, right? Pushing all the way up. And then we ended up, learning more about COVID and ended up entering this corrective phase, coming right back down to 1680. Previous consolidation over here to the left during COVID, where we ended up pushing up from. Now we ended up coming into 1680 over here, tapping into it twice, right? Once with, vaccines coming into the market beginning of 2021, coming all the way back down to 1680. Then we ended up entering this bullish phase over here with a lot of tension between Israel and Gaza, pushing all the way back up to 1910, that previous area, candle body highs, which if you notice, we're right at that level right now as well, right? So then what we ended up getting was very good data coming out of the US over here with NFP. So that pushed us all the way back down to another level that I have marked off, 1750, right? Where we've been holding this support over here for quite some time, right? Then what did we get? Retracement from that move, and then another very good NFP data coming out, pushing us all the way back down to 1680. right? From then, we had a lot of inflation fear, which pushed us up in this area right over here. We ended up consolidating in between 1830, this level that I have marked off, and 1750, which I just talked about. Right, so a lot of consolidation in this area over here, a lot of things happening, but not enough to push us out of this area. What ended up happening after that? February, we end up getting a very strong move bouncing off this level, right? We've been bouncing off this level multiple times. Now we bounced off of it pretty hard with Russia invading Ukraine, which pushed us all the way up to all-time highs, right? We kind of stalled out a little bit around 1910, 1920, and ended up pushing right through it, continuing that move the next month in March, beginning of March specifically, tapping into all-time highs of 2074, 2075, this whole range right here, right? But now, as you guys can see, there's a little bit less fear in the market. That was that initial move that was just priced in. Now there's less fear in the market, along with the Fed increasing rates already, and then also talking about increasing rates by 50 basis points. So that ends up, first of all, technically, buyers are taking profit at these all-time high levels. They don't think price is going to continue to drive through it, right? And you have the calmness between Russia and Ukraine a little bit. Still war going on, nonetheless, but at the same time, there's some talks going on. It seems like this could scale down a little bit, right? It's not going to really turn into a World War III, hopefully. So between that, technicals, and the fundamentals of the Fed increasing rates, that's going to drive gold down, right? So I believe we ended up flipping bearish yesterday based on the report that Russia was pulling their military back from Kiev. So with that happening and that sentiment coming out, that's that third, analysis of the market. That is what flipped the monthly candle bearish, and that's where I believe we grabbed like 30 pips yesterday during the New York session based on that news, right? So this candle flipped bearish. Now we're sitting right back above 1910 again, right? So we got to see how this monthly candle closes. Again, monthly is coming to an end tomorrow, so expect less volume. Obviously, we have ADP today, and we have NFP towards the end of the week, but that is going to be April 1st, right? So just keep in mind that you may not see many moves coming until then. All right, looking at the weekly now. Weekly is a little bit cleaner of price action, where we ended up tapping into these all-time highs up here, rejecting, closing a very weak bullish candle, get the top wick, very small top wick, formed on the next weekly candle, and we end up pushing all the way back down into that 1910 level, right over here, right? So being that we got that, we end up holding support where we reject that area over here as well. This candle ends up closing a very strong bullish candle with a possible wick to fill, but we never ended up getting it, right? We got this bearish candle pushing all the way down, passing the low of this previous wick over here, passing the low of this wick as well, but again, we're still rejecting 1910, right? This whole area over here. Now, there's other levels in here that we'll mark off of price rejecting, but at the same time, on the higher levels, 1910 is that previous resistance, and not only that one, but get this area over here to the left rejecting, right here, and then all these wicks over here to the left. All right, so that's why you want to keep an eye on that 1910 level. Now moving over here into the daily, now you got more things to break down. We had this previous consolidation down here near like 1886. And then where's our guy in here? Is Shrewsbury in here? No? I don't think he was able to make it this morning. Just a little inside joke. Anyway, we ended up holding a support right in this area. Get this bullish candle, multiple rejections of this support right here. We had this fear catalyst that pushed us all the way up, and then we ended up flipping bearish over here, closing right back below 1910 perfectly. And then I always point this candle out. I like this candle. Even though it closes back into the range, it stays in the range over here. It's still a very strong higher low, higher high formed candle, strong candle close with a wick, nice wick to fill as well. So once you ended up getting the next day, we created this bottom wick, bouncing off this 10 EMA right over here. If you guys could take a look at that, bouncing off that level, form that bottom wick, retest this range, flip bullish, fill this wick, and close a very strong bullish candle. And from there, we ended up holding support around 1920, 1925, and then pushed all the way up to close to all-time highs up here. Now from there, like I said, you get buyers taking profit, sellers taking over, and we ended up correcting this entire move with sentiment that they were going to increase rates, and then they increased rates, right? Pushing us all the way back down to all-time highs down here. So now what you guys see is where we held support over here. We end up consolidating below this level. Where we ended up holding support, it looked like we were going to continue up, mirroring this move right over here. But you got to pay attention to certain levels, which you got right over here. So once we got this support formed, price ended up, or this resistance formed, price ended up consolidating, pushing through that level, looking like it was going to retest it and exit it, continuing right back up to 2000 over here. Holding that, or that could have been that resistance over here, but we ended up rejecting that level and faking it out and closing right back into this range. But right now we're bouncing off this level. Previous times we bounced off this level, we're doing it again, where we ended up getting a very weak bearish candle formed over here. This candle creating a lower bottom wick over here, flipping bullish. Or are we going to pass the high of that wick and continue up into this level and tap it again? There's a high possibility that it could do that. But we'll see what we look like in the lower time frames. Everybody clear so far? Just want to make sure everyone's good. Hold on 1 second, guys. Okay. Now looking at the 4 hour. Looking at the 4 hour, now this is that fake out that we ended up getting. Again, you get the fundamentals coming out and news coming out that Russia was going to pull back their military from the capital of Ukraine, Kiev, pushing us all the way back below 1910, which is what we capitalized during yesterday's session, grabbed about 30 pips in here, and then price ended up faking that level out and closing back into the range. So we got a fake out on this area. Now we got a fake out on this previous support over here. And so far, we have a support holding right in this area. So we have this support holding so far, but at the same time, you guys can see that we have this range right here. All right, so now what we see over here, strong bullish candle close, holding support here. You get this candle holding support as well, because this candle ended up mirroring this candle, but closing with no bottom wick, right? This candle passed the low right away, I'm guessing. And as you guys know, when you have a candle like this close with no bottom wick, this candle passed the low right away. This candle is going to flip bearish or flip bullish most of the time, right? So again, we're holding support in here. We need price to close out of this level so far in the 4 hour before you guys take anything as far as something like this right back into this level, 1940, right? Looking at the 1 hour. Now the 1 hour ended up holding a higher low over here, which I do like, and you could possibly play this range over here if you were, if you guys are more experienced traders and you've seen these setups multiple times. I could have seen you guys taking something after this candle closed, waiting for this candle to pass the high of that candle, and you could have, entered this waiting for price to retest 1926, somewhere in this area.
Or even the previous 1 hour candle once it broke the previous high. Because looking at
right here?
At the way that it's closing, usually in a setup like that, you already get a break and retest on lower time frames, given it's a market open or something like that.
Absolutely. Yeah, you got a nice support formed. You guys take a look at this whole area right here. Right? Holding support, this candle kind of exits that area and holds support at that area. Nice bullish candle, higher low. So you can enter after that candle closes, stop loss down here, or if you wait for this candle to close and then you took this impulse entry, you could possibly put your stop loss like right here. So right now, if you guys missed that move, don't get FOMO. Just wait for price to break out of this area. We have ADP coming out. 1 o'clock or 8 o'clock just closed a strong bullish candle. So can we get a move above this area if you get like bad NFP coming out or bad ADP numbers coming out? Could we push above this level, retest it, wait for the reaction to the move, and then continue right back up into this area of like 1940? You got a semi-clean move over here. And then I would say wait for safe sells, probably below 1910. Because again, going back up to the higher time frames over here, we're still holding this support. 1910 is still a very strong support, which we've rejected multiple times to the downside. Right? Hard rejection here, and a very hard one yesterday. Right? So waiting for a clean close below that level is going to give you the idea that we could be continuing down to fill some of these wicks and continue down into 1986 or 1886. And plus, not to mention, this is a very weak bearish candle with a long bottom wick, rejection wick. This candle's still bullish, right? So we could very well hold support and continue up from here. 1 hour, we just broke down. 30-minute, very similar. Well, the 30-minute is actually, just take a look. All this is consolidation, right? All this is sideways price action where once you break above this level, it's a lot clearer where you could take this thing up. But right over here, the reason why it's so confusing to take is because you have this consolidation over here, which we exited, right? Retested it and continued down into 1917, right? But then held support and you got very clean bullish candles coming into this area. So are we retesting this area again to continue down? Problem is we created a higher low or a higher high than this level right here. So we kind of closed right back into the range over here. So if you're looking to take sells right here, I don't think that's a very good idea, especially before ADP coming out. Wait, hold on.
Or even buys, because look at all that consolidation and look at how the previous candle closed as well.
Oh, 8:15 this is coming out.
Yeah, so in 15 minutes.
Yeah, and then unemployment or GDP comes out at 8:30. So we should get some nice volume over here. I would just wait for price to close above or below this level. Yeah, I'm sorry. You were just saying something about buys?
Yeah, I was saying even for buys, you want to, like, safe buys would be as price breaks out of this consolidation if you have not already taken it somewhere here. Right, so
absolutely.
Right now, for example, the reason why I wouldn't be taking a buy on the current candle is it already broke the lows, right? And now it's starting to flip bullish and even trying to push up. So if this candle closes within this little range, it essentially broke the highs and the lows. That's indecision in the market. If anything, I would wait for price to kind of close and give me some sort of break and retest into these areas. I'd rather see it closer to this resistance here, a break and retest, and then you have some safer buy opportunities either here or right above the zone. And then after that, you have clean traffic coming all the way up to 1940, and there's nothing stopping you.
100%. Now, talking to more beginner traders and then more advanced traders, if you guys like to trade news and you guys are good at trading news, you backtested ADP, you know what normally happens, open up that side account if you'd like, and you could place some buy stops above this area. Don't do it with your real account. Just do it with like a news account, if you want to call it that. Put like $1,000 in there, or, well, some of you put like $100 in there, right? That you can play with, right? And it's more of like a gambling account. Again, if you've backtested this enough and you know that you've seen this enough, then you could be doing that. But if not, if you guys are just starting out or you guys are still like trying to find your way in the market, trying to find your edge, just wait for the reaction to the news. All right, wait for that to happen. That's probably the smarter way to do it anyway, even if you were an advanced trader. Like, I'm not placing a buy stop here. I always wait for the reaction to the news. All right, so I'm just going to wait for a nice close above this level. You know, price retraces a little bit, Buyers take profit. Anybody that caught that news move takes profit. We retrace a little bit, and then we could continue up, and that could be the move moving into GDP data coming out. What's it called? 9 o'clock volume, 9:30 volume, and then as of late, if you guys have noticed, 10 o'clock volume has been very nice to us over the last couple months. So there's going to be plenty of moves that you could probably take.
Absolutely. I also like how JPY is setting up at the moment. So the entry is not there just yet, but just the setup. There you go. So how price held on to this blue zone as a support, and it's kind of pushing up. And then if you hop up to even the hourly time frame, we came back, but the last hourly closed as a week bearish, which tells me that we were pretty much just kicking those sellers out. So what I want to see is price breaking above this area here specifically, because when you hop up on the daily or the 4-hour time frame, you'll see how that was a previous daily high. Or not the previous daily high. If you go into the 4-hour time frame, that was a previous 4-hour high. That price is trying to break above.
Right here.
Yep, right there.
We're holding a nice support over here. And then going back to like the 1 hour, take a look at like this price action right here. Looks pretty similar to what we could get like right here.
Yep.
Right? Get these weak bearish candles closing, rejecting long bottom wicks over here, just like we got right here. And then we could very well start to drive up from here.
Yep. So the key here for an entry like this would be to go back down to the 15-minute time frame, since we're trading news. So after seeing all this on higher time frames, daily, 4-hour, 1 hour, 30-minute time frame, then onto the 15-minute time frame, what I want to see here is price breaking above this entire zone and being able to close above it. So in the next like 6 minutes, right when the news comes out, I want to see this candle close bullish, somewhere above, in or above this zone. So like specifically like right here. And then the next candle, let's say we have news that comes out in the US favor, then I do expect this to kind of continue pushing bullish. So that's what I want to see here, to grab at least this entire range and then let everything else run even higher than that.
I like it.
And then the stops in that case should be right below the zone. So, anywhere right below this candle right here, or even right here, as price continues pushing with the volume. So we're about like a couple of minutes away from news coming out. So this is purely market sentiment that's kind of playing out right now.
Mm-hmm.
And, what are we expecting depending on the forecast of the economic data?
Before the news comes out, I'm just going to use the restroom real quick, and then I'll be right back.
Yeah,
I'll
sure.
give you full control. See if I get. Where are you? There we go. There you go.
Cool. Does anyone have any questions so far about anything that has been discussed from a technical perspective, fundamental, risk management, anything like that? Alright, cool. So we pretty much just wait it out now as more data comes out. So we're kind of just setting this 15-minute consolidation. I want to see a candle close in that zone or above that zone. Alright, we got like about 4 minutes left. Pull this up. So I don't know if people on Zoom could see it, but on YouTube. So for your buy here, I would rather wait for price to break above that 376 area that you have marked off, just so you can clear out of that entire consolidation here on the 1 hour time frame. So once you break above that entire consolidation, I think you have much cleaner moves and a much bigger range to continue up to around 162,500 area at the very minimum, and then if price continues pushing, then that's perfectly fine too.
Yeah. Yeah, I can't see it on your screen for some reason.
Yeah, I think it's on YouTube, because I don't know if I could screen share here on his Zoom. But you see the consolidation that I'm talking about between 160,800 and 161,376 that you have?
On the 1 hour, it just looks pretty clean, other than to the far left. But I'll try and I'll load YouTube up and see if I can get it on there.
If you see that entry, like the setup happening right now as the current candle flips, the current hourly candle flips bullish, if you see the entry from there, then that's potentially one entry that can carry out to that 376 area or even higher. But in that specific area, I wouldn't look for an entry. Instead, I would look for runners, just to keep my trade running, or wait for the price to break out of that area and then look for entries there.
Yo.
Yo.
What's up?
Yeah, I've got YouTube up now if you
Was that Lee?
want to go over what you were just saying.
Do you see it?
Yeah.
Okay.
No, it's not loading on YouTube either. It's just Stefanos' screen.
Stefanos, can you pull up the chart that Lee sent, please?
Yes. Lee, what's up, buddy?
How's it going?
Doing great, man. How are you?
Alright.
Nice.
Not bad.
So this is what I'm talking
Yeah.
about right here. So personally, what I would do, just kind of stay out of that area, wait for price to break above this, and then look for your entry. So then you have that clean move coming all the way up here, right? Or even somewhere up top here for those wick fills into 162,500. I wouldn't look for an entry in this area, given that there's consolidation in this area, right? But what I'm saying is, if price, let's say for example, breaks above this right now, if this hourly candle were to flip bullish and then continue pushing, then this could be a potential entry that you can take. And then as soon as price enters into this zone, then you can look for some partials, and then just let your runners kind of go, and then above 161,376 again could be your scale in.
Yeah.
Does that make sense?
Yeah, I get that.
Because you
There's
essentially
that.
don't want to take an entry in consolidation, right? That's a very small range, unless like you're really good with your risk management, like you don't have issues with just closing out the entire trade here, then that's a different story. You could take a trade pretty much anywhere. But if that's something that you're kind of struggling with still, then I would just wait for a price to kind of break out of this consolidation and then look for an entry, or look for an entry before you get into consolidation.
Right.
Alright. ADP just came out.
What are the numbers?
Let's take a look.
It's the same as forecasted.
455.
Oh, wow. They definitely hit it on the dot. So as you guys can see, if you guys took this move right over here, that would have been still valid if you just went risk-free.
Mm-hmm.
Ooh. Alright. So we just broke through 1928. So again, you want to wait for that reaction to the move, wait for a little retest over here. But I'm probably going to wait for GDP to come out.
So what I'm going to do is wait for a little bit of more pullback preferably around that 29, 28 area, and then look for an entry here.
Nice. Keep 4 hour looks nice, just past the high of the previous. Daily over here, past the high of this previous candle over here. Again, you have this range that you could potentially be trading in based on how we're holding support. And the last time we were touching into this support, you had these nice bullish candles coming up to this area. 1945, 1950.
Yep, so all of this is now kind of starting to set up, right? So the daily, the 4 hour, you don't have anything stopping you until you tap into that 1950 area.
Yep. Other than like 1940, this area right over here, which we could reject, but
Yep.
I think if we, continue up to this area, we should be tapping into 1950 at that point.
And before even price taps into 1940, if we get a break and retest of the current zone that price just broke above, then that's just the trend now changing, the structure changing from a bearish market to a little bit of a bullish market.
Are you looking for like, let's say, bottom wick here?
Yeah,
Price-
and then a
yeah.
continued push up.
Cool. So you're waiting for this candle to close.
No, I actually just took an entry at 1929.89.
Based on
The 15-minute time frame, and then as price kind of fluctuated back down a little bit into that 29 area. So we
what
closed.
was your stop loss?
My stop loss is a little bit wider because my zone is actually down here that I have marked off.
Okay. Oh, so it's right below here.
Yeah.
Nice. Let's see what we look like on these lower time frames. Let's see some sort of a pullback into here, and then I could potentially take this thing out. And then GDP volume comes in and could probably continue this thing up. But that's where some of these lower time frames come in. See if we get that pullback over here. All the time frames, all these candles form the exact same way. Higher highs, higher lows, strong bodies, weak bodies. It's the same thing. It's just a lot weaker down here. But if you've seen it, and if you backtest, and like the way I like to backtest on the simulator, is you'll see that I have I have the 4 hour, the 1 hour, 30-minute, 15-minute, and then right in the middle I have the 5 and the 1 minute sitting there. So I'm able to watch these time frames move. So that was that initial push over here. One minute starting to push above. Yeah, I'm gonna wait for GDP to come out before I take anything.
Alright, we almost got the first 5-minute close, kind of retracing back down a little bit. So this is essentially where I would look for another, like an entry. Like this is how I would kind of determine where my entry is. Let the first 5 minutes kind of go by. Let price retrace after that bullish volume that just kicked in. But we're still kind of holding on to that 19, was this specifically, I have 1925 200 marked off as my zone. And then the stop loss is right below that. So I'm still going to give price enough room to kind of make some bottom wick rejections and whatnot, and then continue pushing. Because we just broke the previous daily high, and then also a break and retest on the 4 hour. So I'm using those time frames also to kind of manage the trade.
Nice. Anybody else in this? Does anybody want to add their input of what they're waiting for as well?
Just watching to see how it goes.
Got it. So cat's waiting for the 5 minute to flip bullish. Oh, KB is. Sorry, I always get cat and KB mixed up. My bad. Want to add their input of what they're waiting for as well. Sure. All right, 1 minute is holding support so far right in here.
So in about, 9 minutes, we have GDP data?
Yep. Yeah, that's what I believe I'm waiting for right here. Unless we get like a strong bullish candle close, bottom wick formed past the high over here, which means the 5 minute is flipping bullish. But I could stay patient on this. Honestly, wish I got it from down here, the one we were breaking down before. Jen's waiting for GDP too. Nice. Good job, Peter. Awesome. Oh, emoji. Good job, buddy.
Website are you using for your news now?
What's up, Lee?
What website are you using to find your news?
Forex Factor.
Right. Just didn't know if you had changed since the last time I was on.
No, sir. No, sir. Forex Factory, Forex Live, Bloomberg. And I love using teletrader over here to get market sentiment of all our indices and everything. This is like a terminal over here. If you guys don't have this, it's in the chat. KB is another one. Financial Juice. What is this? This is like Squawk. This is like a Twitter. I like this, KB. Huh. This is awesome. See, this is kind of what like the Bloomberg terminal provides. Like a nice Twitter stream. Live Squawk copy. Okay, so this is like a free Live Squawk?
I used to use the Bloomberg terminal when I was in college. Our college had it. It was free for students.
Wow, that's awesome.
Yeah, it was like the best thing ever.
Dude, that's $900 a month, I think.
They used to pay like $20K per terminal, and I think we had like 20 terminals. Yeah, but it was pretty cool because you had stocks and everything that you want to take a look at, all the analysis that you wanted to do.
What's she gonna? Oh, wait a minute! I have this saved somehow. Huh? That's weird. As you guys could see, we are retracing. We never ended up. We got that close on the 1 minute, but below this previous area right here, we didn't close right around here where we got the bottom wick formed on the next candle past the high of that candle. Then I could see us continuing up to fill that wick, but we never got that. So that's why I'm just gonna wait for GDP. Yeah, you probably sent it before.
So what I want to see here is actually a correction of this nice bullish push up that we've had on the 15 minute, and then a continuation back up. So I want to see that retracement happening in that 1925 area, which is that consolidation, and then continue pushing.
If you guys take a look at the 15 minute, we keep going back above and beyond, or above and below 1928.
Yep. So this is what I'm looking at right here. Oh, give me one.
Sorry.
Sorry.
I even have.
Right here.
So low retest of that area.
A retest right here, and then continue pushing back up. Because we just broke out of all this consolidation, and you have a break and retest, so there should be no reason why it's not going to continue pushing. And just retracement and then continue pushing back up.
You don't mind it getting that close to your stop loss?
No, stop loss is 1922 0.161.
Oh, okay.
So I'm giving it room to retest, but it's tight enough so that if it continues pushing back down, I'm out like the first moment it continues pushing.
Nice.
Right, but I'm giving it enough room to grab the liquidity and whatnot and then continue pushing.
Got it. Yeah, I thought your stop loss was here, but that's your zone.
Mm-hmm.
All right, 1 minute, kind of grab liquidity in this area. See if we get a stronger 1 minute candle close. There we go. I'm still gonna wait for the GDP to kind of exit this area.
Yeah, I think we have about 3 minutes left.
Yep.
I will have to head out at 5:45 today.
Okay.
But yeah.
Sounds good. That's absolute news anyway. But we'll break down for you guys what to expect, coming in the rest of the session, and
Yep.
so you guys are all set for to trade on your own.
Do you want to do an NFP session this week too?
Yeah, of course.
Alright, so I guess we will be back on Friday, maybe around the same time for NFP.
Okay. How's everyone doing so far this week? Everyone feel confident? You guys feel good? Any psychology questions you guys want to go over? That's what we're here for, so ask away. You guys on YouTube too. Got a nice showing today. Good shit, guys.
I took one trade this morning on secured 17 pips. It's in the Slack group.
Oh, nice. Okay. I will, it's over here. Did you put it in, okay. Your session. In London?
I think it's under London.
Okay. Oh, there we go. You took this on, this is, GA. Okay. Bouncing off that level. So you took it as that candle flip bearish, the 15 minute?
Yeah.
Okay, I like it. Secured, yeah, 1 minute left. We'll check on that in a second. Close further 10% as strong rejection. Okay. Nice. So let's see live squawk. Does this thing report a lot quicker, KB, than Forex
yeah,
Factory?
it does get the data quicker than Forex Factory.
Okay. So where are we right here? ADP, found GDP over here. So do I have to press anything for it to update?
No, but what I tend to do is literally just press refresh on the screen, and then it should just get it up.
All right. So the 15 ended up closing below. And GDP still is not out. Over here. Come on, come on, come on. All right, somebody update me with what the number is.
Not out on Forex Factory either just yet.
Oh, 6.9%.
6.9. Okay,
Just come out on.
nice. So maybe we could get that continuation on gold.
Yep.
1930 makes sense if the current 5 minute closes strong bullish and next breaks the high. 1930, yeah, absolutely, Peter. That might be the best case scenario. Because you have this consolidation over here on the 1 minute. It looked like we were going to start to retest and start to exit with this area, but that's why I was saying wait for GDP to come out because you got the further pullback but we're still respecting this area. This is a nice demand zone right here so far. We keep rejecting multiple times over here, so we'll see if we end up closing above that level, see if we start to exit this area, and then we can continue up. So far, looking at the 5 minute got a hard rejection, and a bullish close right here, right? But it ended up rejecting this area, so I think safer buys are going to be above 1930. Great job, Peter. I'm trying to see if the 30-minute flips after a nice pullback. Let's check out the 30-minute. Yeah, 30-minute ended up closing above this level over here, right? Strong bullish candle. So now we need that bottom wick formed on the 30-minute candle, and you want to take it as it flips bullish. Okay. Now this 15-minute candle did close above, but it closed a weak bullish candle with this long top wick. Right, so a lot of times this wick doesn't get filled. We need like a stronger support formed. Maybe like a pullback in this candle closing bearish. Next candle closes bullish, and then the next candle can fill that wick. Now what we could have here is a lot of these numbers were expected and priced in. ADP came out exactly as expected. Right, and then GDP came out 0.1% lower than previous, right over here, and lower than expected as well. So maybe we're not going to get that much of a move, and we need to wait for further volume to push us up. Let's go back to the other time frames.
Eddie on YouTube has a question about what lot size to use on a $100 USD account. It depends on your risk percentage and also your stop loss. So if you're using like let's say a 2% risk, then I usually go for 5 to 10 cents. And then if you're using something lower than that, then obviously penny lots, something smaller than that. But I would highly suggest don't go anything higher than 3% on your account. But again, it depends on your stop loss, right? So that's why I gave you a range.
And also, like, don't trade anything other than 0.02 lot size.
Because you can't take partials.
What was that?
I said you can't take partials then.
Exactly. Like if you're trading with a 0.01 lot size, it's or 1 cent lot, you're not going to be able to manage your trade. You're not going to be able to cut losses and practice that. Where now, if you trade with a 2 cent lot, now you can at least cut 50 if you're not feeling that 100% about the trade anymore. Or, you could cut partials at 10 pips and you can learn how to manage risk that way.
Yeah, and trailing your stop loss and all of that. All you could really do on like a penny lot would be trailing your stop loss.
Exactly. And if that's not like your risk management psychology and what you're comfortable doing, then you're not getting the best practice. Mm-hmm. But what I'm looking at the 4 hour now, since we're not getting like that big push that we're looking for with the news coming out, I'm looking for this candle to close in about 25 minutes, right around this area. Very strong bullish candle. Next candle creates its bottom wick, flips bullish, fills that wick, and continues right back up to 1940.
Yep.
So maybe wait for the hour to close and wait for the 4 hour to close, which is the hour.
Alright, so that was pretty much the same thing for gold here. And then for GJ, we can quickly go over that as well, and then I'm going to have to hop off.
Yeah, I haven't changed my sentiment on GJ right here. I'm waiting for this whole area to clear.
Mm-hmm.
Stay patient. You don't have to take that. Actually, right over here as well. And then I'm looking for something right here, right? And then this move right here. Got about 100 pips right here, and you got about, actually, I didn't even mark that off. You got about 76 pips right here with a cleaner move to the left, and we're breaking the bearish trend.
Mm-hmm.
All right, so just wait for that close above and a wick to form, or a classic retest and continue right back up. But wait for the candle to close above that level, because you could very well reject it. And then again, you got this area right here. Can be taking this in. I would stay out of that. Make sense?
And if you guys ever get confused looking at price action, let's say on the 15 or 30-minute time frame, because there's a ton of consolidation, especially on like a week like this where things have started to pick up starting today with employment data leading into NFP. Just hop up to the 1 hour time frame, 4 hour time frame, daily time frame, and look at those levels. So here, for example, on GJ and Gold, both of them, the 15-minute, 30-minute kind of look nasty. So then you go onto the daily time frame, the 4 hour time frame, and you look at, well, if price broke the previous 4 hour highs or 4 hour lows or daily highs and lows, then where can price move to next? And when you start dropping down to lower time frames using those same levels that you marked off on the 4 hour or the daily, then look at candle closes instead of just price pushing up out of that area. You want to see clear candle closes out of those zones. Narrow in into your price action, narrow into your consolidation, where's exact consolidation resistance, where's exact consolidation support, and then look at if price were to retest that area and then continue pushing up, does it really make sense? And how would you take those entries? If price simply closes above this, comes back down and comes back into that consolidation area, clearly it was a fake out. The market is not ready for any more buy opportunities or sell opportunities, whichever one that you're looking at just yet. So then you wait for more news to come out, you wait for the market open, pair that with market open or market overlaps, and then that's where you have that volume to look for a better entry. And also make sure that you're not entering swing trades on a Friday, the last session of the week, like especially New York session, if you're already not in 50, 60 pips in profit on your trade going into the weekend, because then you'd just be accumulating more swap fees over the weekend, which really wouldn't make sense.
Oh yeah. Yeah, that's why I have those rules on a day like Friday where I'm not really leaving runners that much. If I'm taking a scalp, I'm closing almost the full thing or leaving a small runner and letting that go. But it's same thing with Monday. Monday, if I'm either trading in a range or a nice range to trade in, or you don't have much volume on Monday, I'm taking most of my profit. Tuesday, Wednesday, Thursday, I'll let a runner go.
Yep.
Or enter 2-3 positions and let that one just run.
Yep.
You're not going to do that on a Friday. So just knowing the situation, as Sharma always likes to say, knowing the limitation of your trade, and then always keeping that in mind is going to pay dividends over time.
100%. So I will have to head out now, but if you guys have any questions, feel free to reach out to either of us on Instagram, or even if you just comment below, we will respond back. But yeah, right now, still waiting for price to retrace into this area as it is right now and then continue pushing. But if price breaks, that this candle low right here, then that's pretty much where I'm out, right here. Yeah, so I'm waiting for that entire area. Price is just kind of retesting into this, which is perfect. Just waiting for a rejection. And then if you haven't gotten an entry, you're still looking for an entry once price holds on to this area support and then continues pushing back up, that's an entry that you can take.
And listen, guys, before we head off, I just want to thank you guys for showing up, because this is how you guys get better, right? Thank yourselves. Waking up early, getting to the market, listening to analysis, doing your own analysis, sending charts, all that stuff. It's what's going to pay dividends over time, like I just said, for you guys to become much better traders. Also asking questions, not being afraid to ask questions and stuff like that about psychology, about setups, all that stuff. Just keep doing that. Keep showing up. Same thing in anything. Same thing in business, same thing in school, same thing in sports. If you just keep showing up to practice, you keep showing up to everything that's going on with your group or whatever the case may be, you're going to get better over time. It just automatically happens.
100%.
Right? So just keep it up, and we'll see you guys Friday for NFP. My group, I'll see you guys tomorrow morning.